Very good morning to all of you. On behalf of Auditing and Assurance Standard Board of Institute of Chartered Accountant of India, I welcome you all in today's 151st CP program in the form of webinar organized by AASP of ICI this year. It is our immense pleasure to inform everyone, to all of you, that today is our 151st program. And AASP has organized various webinars as well as seminars during this year. And in the continuation of this, today we are going to cover SA 250, that is consideration of laws and regulations in audit of financial statements. And in order to tackle this SA 250, we are having with us C. Amit Hundia ji, our very learned speaker of the day. So on behalf of AASB of ICI, I welcome Amit ji on this AASB platform in the form of in this Zoom platform in the form of the webinar. And Honorable Chairman sir is stuck up in the meeting, is on the way, so maybe he will be joining us within a couple of minutes. And we are having with us our two moderators, CA Rajni Aneja ji and CA Isha Garg ji. So without wasting much more time, I request Rajni ji to please start the proceedings of today's webinar. Over to Rajni madam, please.
Yeah, good morning everyone. It is with great pleasure and privilege that I welcome you to today's webinar organized by AASB. Today's topic is of utmost importance in finance and corporate accountability, which is consideration of law and regulation in an audit of financial statement. At the outset, I welcome and thank CA Sanjeev Singhal, Chairman of AASB of ICAI, and CA Vishal Doshi, Vice Chairman of AASB of ICAI, for this opportunity. I also welcome CA Amit Hundia, our guest speaker of the day. I am honored to serve as your moderator for this insightful session, where our guest speaker will enlighten us all about SA 250. The objective of today's discussion is to explore how auditors can effectively navigate and adhere to the various laws and regulations governing financial audits, ensuring the reliability and credibility of financial statements. We are fortunate to have a distinguished expert, CA Amit Hundia, who will share his insights, experiences, and expertise on various dimensions of this topic. Our guest speaker will address the challenges faced by auditors, share best practices, and other practical guidance on how to ensure compliance with the ever evolving legal landscape. Throughout our time together, I encourage each one of you to actively participate in the discussion. Your questions and contributions are vital as we strive to create a collaborative and engaging environment. Before we commence, I would like to extend our gratitude to Auditing and Assurance Standard Board of ICAI, especially CA Sanjeev Singhal and CA Vishal Doshi for their support in making this webinar possible. This is 151st seminar of this series in this financial year. Their commitment to promoting knowledge and excellence in our professional community is commendable. Without further ado, let us embark on this journey of exploration and enlightenment. I hope that by the end of this session, each of us will have gained valuable insights that will enhance our capabilities as auditors and contribute to the overall advancement of financial transparency and accountability. Thank you once again for joining us. Now I look forward to a fruitful and engaging discussion. I request my co-moderator, colleague CA Isha Garg to give a brief introduction of CA Amit Hundia, our guest speaker of the day.
Thank you so much, CA Rajni ji, for giving such an enlightenment opening remarks. So, first of all, I would like to welcome CA Amit Hundia ji for giving such to giving us this opportunity to help the students understand SA 250. So Amit Hundia ji is, apart from being a chartered accountant, he's also a qualified company secretary, a law graduate, and a DISA holder. He possesses rich working experience of more than 2 decades in the field of assurance and advisory services. He is a partner of Singhi and Company, chartered accountant, and who is a network member of Moore Global. Previously, he was a partner with BDO Haribhakti and have spent more than a decade with them, specializes in the field of company law and corporate governance matters and has in-depth knowledge of accounting and auditing standards. He has also worked on assignments as a technical reviewer for Quality Review Board formed by SEBI, technical reviewer for Financial Reporting Review Board formed by ICAI. His industry exposure comprises of NBFCs, housing finance, stockbroking, real estate and infrastructure, gaming and hospitality, manufacturing and service sectors, etc. He possesses the international exposure and has worked on secondment in New York and other places of US. On sharing of the knowledge front, he has been a speaker of ASB, WIRC, and various forums of ICI. So I would now like to call C. Amit Hundia to share his experience, his expertise and practical knowledge on SA 250.
Thank you. Thank you, NLG, Pratniji, and Isha ji. Very good morning to everyone. Before I start, I want to give a special thank you to Sanjeev Singhal ji, Vishal Bhai, and the entire ASB team for inviting me as a guest speaker. And I also came to know, and it's a good thing for us to know that Vishal Bhai has also joined IASB, so that will be a good learning and good insightful matter for us as a chartered accountants, and we'll have a lot of further clarity in future, and we will have a good command over those boards. So today, now we are going to touch upon the SA 250. We are going to discuss in detail about SA 250, the requirements and the process. So I am sharing my screen. Is this screen visible to everyone?
Can you make it full screen, sir?
Yeah.
Yes, sir. Fine.
Yeah. So today we are going to discuss in detail about the requirements of SA 250. SA 250, the heading says consideration of laws and regulations in an audit of financial statement. So as we know, I mean, the auditing standards are very important, and nowadays the regulators are harping more on the compliances of auditing standards in addition to the accounting standards. So the knowledge of auditing standard is very much essential. And auditing standard. So what do you mean by standard? So standard means something which is standardized. So either we do audit of a large scale entity or a small scale entity. The standards are similar, the process are similar, so that the outcome or the opinion which is being formed in any of the circumstances should be similar. So in today's session, we are going to cover these topics: scope and objective, definition, certain definitions and responsibility of the management with regard to SA 250, responsibility of the auditor, indications of the non-compliance with laws, requirements of 250. Then in addition to that, we will also touch upon code of ethics, NOCLAR. So I thought this will be essential for us to know, because NOCLAR is also having many provisions in sync with SA 250's requirement. And there's a new amendment. So when I say new amendment, it came into existence from October 2022. So this is something which is very much essential. So we will be discussing on that part also. Applicability of NOCLAR, differences between NOCLAR and SA 250, and FAQs on NOCLAR. So scope and objective, if we just give me a minute. Yeah, scope and objective. So scope and objective, what are the auditor's responsibility? Auditor's responsibility is to consider is that the auditors, what is the auditor's responsibility to consider laws and regulations when performing an audit of financial statements? So an auditor, whenever carries out any audit, any statutory audit, so what are the responsibilities of the auditor while dealing with the audit of that particular company's financial statement? So now quite frequently with a good pace, and the amendments are also happening in various laws and regulations which are quite important. So it is very much important for an auditor to know the relevant laws and regulations which are applicable to the relevant entity, which is being audited by that particular auditor. So, for example, a company which is dealing in real estate. So, I mean, the real estate laws and regulations would be one of the essential stuff. In addition to, for example, Companies Act, Income Tax, and GST, which are the bare minimum laws which are applicable to all the entities, all the corporates which are working in India. So in addition to that, the sector-specific laws will also be relevant, and they will also play an important role on the SEBI guidelines or SEBI regulations through which it is getting governed, or it's being dealing with the various requirements of the stock exchanges. So that will be one of the relevant law and regulation for that particular entity in that industry. Then the scope does not apply to other assurance engagements. So the standard says that the scope does not apply to the assurance engagement where the auditor is specifically engaged to test and report separately. So if there is a separate reporting requirement, a specific reporting requirement, then this SA 250's requirement will not get applicable or triggered. Otherwise, the SA 250's requirement will get triggered in case of the audit which is being carried out in case of general audit for the financial statements. What are the objectives of this standard? The objectives are the standard prescribes the objectives of the auditor as to obtain sufficient appropriate audit evidence. So the one of the requirement here is to obtain sufficient appropriate audit evidence regarding compliance with laws and regulations to have a direct effect. So the standard has splitted this objective in two parts. One, the laws and regulations which has a direct effect on the determination of material amount and disclosure in the financial statement, and the other laws and regulations. So as we discussed, for example, Companies Act will have a direct effect, or Income Tax Act will have a direct effect with regard to various provisions of law, or GST will have a direct effect on the financial statement or disclosures. So these are the laws which are having direct effect, and there can be other laws. So for example, environmental laws in case of chemical manufacturing company, or in case of other companies. So it all depends. I mean, there can be other laws and regulations which does not have a direct implication on the financial statement, but which are very much relevant to the entity's existence. So the law, the auditing standard is being split into two particular parameters, and the objective revolves around these two particular parameters. So in case of direct, the laws having direct effect, the objective or the requirement of the standard is that evidence. So there is a necessary requirement that sufficient appropriate audit evidence is obtained by the auditor regarding compliance with those laws and regulations. And then in case of other laws and regulations, the requirement is to perform specified audit procedures to help to identify the instances of non-compliances with those other laws and regulations, which may have a material effect on the financial statement. So one thing is that there should be a material effect. And second, the procedures which are required to be carried out should identify those kind of non-compliances. Then we will move on to the next slide, which deals with definitions, various definitions, and the responsibility of management. So the one of the definition here is non-compliance. So what do you mean by non-compliance? I mean, non-compliance is a very wide term which is defined in the standard. It deals with, or it's being defined as any act of omission or commission. So if you omitted to do something, or if you have done something, so both will be considered as a non-compliance if it is in breach of a regulatory requirement. So one cannot take an excuse or a shelter that a person was not aware, or a company was not aware, and they had not dealt with the regulatory requirements. So there is no excuse in those scenarios. The definition of non-compliance is quite clear here. It says acts of omission or commission by the entity, either intentional or unintentional. So many times that is being argued that this was not my intention. I mean, I did this, but then this was not my intention. I didn't meant to breach any provision of law. So the law, the definition says it doesn't make any difference whether it is intentional or unintentional, which are contrary to the prevailing laws or regulations. So if we see, the definition is quite exhaustive. It has a wide gamut. It says omission or commission by the entity, either intentional or unintentional, which are contrary to the prevailing laws or regulations. Then it says such act includes the name of the entity or on its behalf by those charged with governance, management, or employees. So it is not necessary that the transactions are entered by the company only, but it can be entered on its behalf by TCWG, management, or employees. As we know, there is a difference between management and TCWG. So I'm not going into much detail into that particular segregation, but then those are relevant with regard to this essay. Non-compliance does not include personal misconduct. So the standard says that in case if any personal misconduct is being carried out by any of the KMP in their individual capacity, which is not related to the business activity, then it will not be considered as a non-compliance from the perspective of SA 250's requirement. So for example, if any of the KMP is drinking and driving a vehicle, so that may be considered as a non-compliance, but that non-compliance is in the individual capacity of that particular person, and it has no bearing on the respective corporate in which that particular person plays a key role as a KMP. Responsibility of the management. So, friends, so what is the responsibility of the management here as per SA 250? The responsibility is it is the responsibility of the management. The standard says that it is the responsibility, ultimate responsibilities of the management, and with the oversight of those charged with governance to ensure that the entity's operations are conducted in accordance with provisions of laws and regulations. So, the ultimate responsibilities of the management, along with the oversight of those charged with governance, to ensure that everything is in compliance with law and there is no breach of laws and regulations. The responsibility of management is not diluted here in this auditing standard, though the responsibility is also casted on the auditors to carry out certain specific set of procedures so that adherence can be done with regard to compliance of laws and regulations. So examples of the type of policies and procedures an entity may implement to assist in the prevention and detection. So, I mean, if one can argue and one can say that what should be done, there are many laws and regulations. So how as an auditor one can take care of and what is the responsibility of management? So the standard has also dealt with that requirement. It has stated that register can be maintained with regard to significant laws and regulations which are applicable to a respective entity. So, for example, I mean, there can be n number of laws which are applicable to a company. So, nowadays, I mean, we are in the month of March. We are in the month of January. We are in mid of January, and we are very near to March. So, in many of the corporates, the planning must have started with regard to year-end closure. So, the planning also plays an important role. So, while doing the planning for an audit, it is important that the audit team decides and identify which are the significant laws which are applicable to the respective entity and how those laws and regulations will be relevant on the direct effect by having a direct effect on the financial statement and not having a direct effect, but they are vital to the company. So they can plot it out, for example, again, Companies Act, Income Tax Act, GST, in case of real estate, RERA, case of stockbroking company, SEBI guidelines, in case of NBFCs, RBI guidelines, in case of HFC, housing finance, NHB regulations, in case of bank, I mean RBI regulations. So they can plot out, so like in addition to that, labor laws which are applicable in case of most of the corporates, PF, ESIC, etc., etc. So they can plot out all these requirements of the various laws, I mean the various regulations which are applicable. And from that, they can identify which are having a significant impact on that company's financial statement and which does not have a significant impact. So that will act as a good tool for carrying out the entire audit process that will be helpful to the audit team. So first thing, a register of significant laws and regulations, then it should monitor legal requirements and ensuring that operating procedures are designed to meet these requirements. So monitoring is also one of the essential aspects here. Then it should be seen that appropriate systems of internal control are in existence with regard to it. One can request wherever IFC is applicable, internal financial control can see that in internal financial control, RCM risk and control metrics. I mean, a parameter has also been factored with regard to compliance of laws and regulations. So one point can be identified and can be inserted which are the risks with regard to various laws and regulations to be complied with, and how the management is complying with them. So what are the controls with regard to those risks and whether they have been adhered to that or not, and they are effectively being implemented or not. So I mean, it can be seen and it can be observed from the IFC perspective also. Then developing, publicizing, and following a code of conduct. I mean, a lot of large corporates have a code of conduct. In case of other than large corporates, again, there can be a request to the management to identify and to frame a code of conduct. Again, it depends upon the size and scale of the company, on the basis of which it can be framed. Then employees are properly trained and understand the code of conduct. It's not necessary. I mean, it's not getting completed by having a code of conduct in place. It should also be seen that the code of conduct is known to the employees and they are properly trained and they understand the requirements of the code of conduct framed by the company, monitoring the compliance of the code of conduct, and then engaging legal advisors to assist in monitoring the legal requirements. So these are some of the broad examples which are specified in the auditing standards, which will be very helpful and which can help us to see that the responsibility of the management is being carried out in the manner in which it is required to be carried out. What are the responsibilities of the auditor? So we have with regard to SA 250. Now, what are the responsibilities of the auditor? The standard says the responsibility of the auditor is to identify material misstatement in the financial statement due to non-compliance. So first thing is to identify material misstatement in the financial statement. So if they are immaterial, I mean, auditor is not supposed to look into this or discuss in detail about those immaterial stuffs. So identify material misstatement due to non-compliance. The auditor is not responsible for preventing non-compliance. So one of the important thing which is specified in the standard, that though auditor is responsible to identify the material misstatement in any of the circumstances, auditor is not responsible for preventing non-compliance. So prevention is not the parameter or the obligation on the part of the auditor that the non-compliances are prevented, and it cannot be expected to detect non-compliance with all the laws and regulations. So the standard is clear on that part. But still it says what are the responsibilities and how auditors should perform their work while they carry out audit of a financial statement. The auditor is required to take into account the applicable legal regulatory framework applicable to a particular company. Then owing to the inherent limitations of the audit, as we all know, there are inherent limitations in audit. I mean, there is a risk that some material misstatement may not get detected, even though the audit is properly planned. And this can be because of there are many regulations at present in India. So there can be a possibility that something is being missed out. But then if auditor has carried out the entire audit process with due approach and with professional skepticism, I mean, the chances are rare that the material laws or the material non-compliances can get missed out. And non-compliance may involve conduct designed to conceal or such as collusion or forgery, etc. So I mean, this is one of the another inherent limitations in an audit. So material misstatement may not get detected, can get detected. Then SA distinguishes the auditor's responsibility into two parts, what we discussed. One, again, laws which are having the direct effect on the determination of material amount, which is very important. And then second, laws which does not have a direct effect, but compliance with which may be fundamental to the operating activity of the business or to an entity's ability to continue its business or to avoid material penalty. So there are three parameters. So either operating aspect of the business, it is fundamental to it, or entity's ability to continue as going to continue or to avoid material penalties. So for example, I'll give an example in case of NBFCs. In case of NBFCs, the 50-50 parameter is required to be adhered to. And suppose a company which is already registered as an NBFC and its 50-50 test is not being adhered to. So for example, so when I say 50-50 is like 50% of assets should be from financial assets and 50% of income should be from financial income. So if that test is not met as on the balance sheet date and that company is holding a license of NBFC, I mean, then there is a breach of the guidelines of the RBI. And this may be fundamental to the operating aspect of the business of the company. So it may not have a direct effect on the financial statement, but it is fundamental to the operating aspect of the business. Or for example, if a company is having, second example, if a company is having an operating license compliance with the regulatory solvency requirements, and it has not been adhered to or compliance with the environmental regulations in case of a chemical manufacturing company, or taking another example, in case of a real estate company not complying with the real estate laws and regulations. So though it may not have a direct effect on the financial statement of the company, but overall, from the perspective of the company, it is fundamental to its ability to continue its business. So those laws will also be critical and will require to be evaluated, and the implication will also be required to be evaluated. Auditor is expected to maintain professional skepticism throughout the audit. This is one of the requirement of the auditing standard, and this will find it many of the another auditing standards also. So, what do we mean by professional skepticism? I mean, professional skepticism is something like you should have a vigilant mind. You should have a questioning mind, that you should keep on looking into the things and inquire about the credibility or the other parameters. So that kind of vigilance should always be there. That there may be a possibility that something is wrong here based on the circumstances in which it's getting involved. Indications of non-compliance with laws and regulations. So the standard has also specified what are the indications. So these are some of the broad indications which are specified in the standard. Not necessary that all these things will lead to a non-compliance with laws and regulations, but again, this is getting linked to the professional skepticism. If one looks into these indicators, they will come to know, and if they dig down it into further, there may be a probability that they can find that there are some non-compliances with laws and regulations, or there may be a possibility that they can come out with a conclusion that it does not have any implication. But then these indicators will be very much relevant for an auditor to comply with the requirements of SE 250. So we'll just run through these indicators which are prescribed in the auditing standard. So if any investigations are carried out by the regulatory organizations and government departments, or payments of fines or penalties. So if any material fine or material penalty is levied, so normally we know that fines or penalties are levied in case of breach of laws. So again, this is an indicator so that which kind of laws are being breached. I mean, we can inquire, we as an auditor can look into that. And any investigations which are being commenced by the regulatory agencies, again, that can be an indicator that there are nowadays we know in media many things comes up quite quickly, and there may be a possibility that some negative news is there in the media. And nowadays, believe me, friends, that nowadays, I mean, when we are dealing as an auditor, we know that if anything comes up in the media, more specifically with RBI regulated entities, we receive a call from the regulator very quickly. I mean, once this news gets cropped up into the media, and they inquire with us about the authenticity of those media comments, and they even inquire with the management. So they inquire with the management and auditors both. So as an auditor, you should also be vigilant enough that if there are any adverse media comment for any of the company, there can be a trigger point, and that should be evaluated and documented that what are the outcomes of those media comments after having adequate discussions with the management. Payment for unspecified services or loan to consultant related parties. So if there are large payment to related party, again, there can be a probability. Sales commission or agent fees that appear excessive in relation to those ordinarily paid by the entity or its industry. So again, I mean, if sales commission or agent fees that appear excessive, so if any excess payment is being made, again, that can be an indicator. Purchasing at price significantly above or below market price. So if anything which is purchased significantly above or below the market price, again, can be an indicator. Unusual payment in cash. So there are unusual transactions or unusual payments in cash, purchase in form of cashier's check, etc. Again, this can be one of the indicator. unusual payment towards legal and retainership fees. So very large amount is paid to the lawyers. So then again, there can be an inquiry which can be made with the management team that for which purpose the amounts are being paid to the lawyers. So normally the lawyers are being hired for uh, dealing with any of the disputed matter or any of the matter where their guidance is required in with regard to compliance of laws and regulations. So this will again be one of the key parameter. Unusual transaction with companies registered in tax haven. So those which are registered in tax haven, again, this will be relevant if there are unusual transactions which are observed. Uh, Payment for goods or services made to other country other than the country from which the goods or services originated. Payments without proper exchange control documentation, existence of an information system which fails. So this is important again. I mean, this was stated earlier, even prior to this audit trail requirement came into existence. So the auditing standard stated this that existence of an information system which fails, whether by design or by accident, to provide an adequate audit trail or sufficient evidence. So what does this mean? So like nowadays, friends, we know that audit trail is one of the important thing, and we as an auditor are supposed to issue a statement in our audit report with regard to compliance with the requirements of the audit trail, which are as issued by the MCA. Now, the particular phrase states that there can be an evidence that the audit trail requirement has been failed, and it can be either by accident or by design. So if something has happened like this, then again this can be an indicator for us to know or to inquire that what happened and why audit trail is being disconnected in between for certain point in time. So this will be something very important again. Unauthorized transactions or improperly recorded transactions. So these are some of the broad indicators, examples which are given in the auditing standard, and this will be very helpful for us to know and to understand the requirements of this auditing standard in detail. What are the requirements? So now, if we move on further to understand the requirements of the auditing standard, that the auditor shall obtain a general understanding of the legal and regulatory framework applicable to the entity. So as we discussed, I mean, before we commence the audit, during the audit planning stage, we should we should identify which are the laws which are applicable on the entity. We should discuss with the management. And then based on that, we should devise our audit plan. I mean, that should also be factored into our audit plan accordingly. Then how the entity is complying with that framework. So the another important part is one is identification, and then second is how the entity is complying with that framework. Auditor shall obtain sufficient appropriate audit evidence. So one of the things is to obtain sufficient appropriate audit evidence with regard to laws which have a direct effect. So which we have discussed in detail in the earlier slide. I'll not discuss on this part again. And then to identify instances of non-compliance with other laws and regulations. So this is one of the requirement of the auditing standard that auditors should carry out these processes. Then, as a part of identifying instances of non-compliance with other laws and regulations, auditor is expected to inquire with the management. As we know, I mean, when we carry out any audit, or even in limited even case of a listed company, we as an auditor are supposed to make inquiries with the management, discuss with the management, and the various relevant heads of the company to understand are there any non-compliance with any laws and regulations or not. So inquiry is one of the important parameter. Inquiry should be carried out, and the outcome of inquiry should be documented as a part of work paper. And then inspecting correspondences, if any, with the relevant licensing or regulatory authorities. For example, in case of a RBI regulated entity, if any inspection is being carried out by RBI, or in case of a SEBI regulated entity, if any inspection is being carried out by SEBI, then we should request the management to provide those documents in which the reports are being issued by the authorities or the inquiries are being made by the authorities regarding this, and at last obtain the management representation letter with regard to the compliance of the laws and regulations. Auditor shall understand the genuine nature of the act and further information to evaluate its impact on the financial statement. If the auditor suspects there may be non-compliance, he shall discuss the matter with management and where appropriate with those charged with governance. So what is the audit procedure? The audit procedure further will be when the non-compliance is identified, auditor shall understand the nature of the act and inform and further information to evaluate its impact. So what is the impact? So first of all, understanding the act and then its gravity on the financial statement, that will be very much helpful. And then if the auditor suspects that there may be a non-compliance, he shall discuss the matter with the management and where appropriate with those charged with governance. So identification, its evaluation, and then communication is something which is important. And then if management or those charged with governance do not provide sufficient information, the standard further says that if they do not provide further information and where the auditor believe that non-compliance is something material to the financial statement, the auditor shall consider the need to obtain legal advice. So ये standard कहता है कि in case अगर ऐसी कोई situation होती है तो auditor should also evaluate that is there a need to obtain a legal advice. So there may be a possibility, there may not be a possibility. Again, it's a judgmental call of the auditor. It depends upon the professional skepticism. And then if sufficient information about suspected non-compliance cannot be obtained, the auditor shall evaluate the effect of the lack of sufficient appropriate audit evidence on the auditor's opinion. So अगर आपको sufficient audit evidence नहीं मिलता है, then auditor has to evaluate what is its implication and whether that implication will trigger any reporting requirement in the main audit report. If it is, then auditor should report it adequately. So these are the complied with when a non-compliance is being found or identified by the auditors. Reporting non-compliance to those charged with governance. So the standard says that unless and until all those charged with governance are involved in that particular matter of non-compliance, the auditor shall communicate with those charged with governance about those non-compliances. So if it is observed that some of the KMPs are involved, but not everyone is involved, it can be discussed with those charged with governance about the non-compliance as soon as it is being noticed by the auditors. If the auditor believe or suspect that the management or those charged with governance are completely involved in non-compliance, then the auditor shall communicate the matter to the next higher level of that authority, which can be either audit committee or supervisory board. And at last, if there is no higher authority, then the auditor can consider to obtain legal advice what should be done in this particular situation and how to deal with it. So reporting by auditors. So what should be done? So reporting of non-compliance in the auditor's report. The standard says that once you have identified the non-compliance, you have identified its gravity. After that, you have communicated with the those charged with governance and all, and still the non-compliance is there. It is not mitigated or rectified. And the non-compliance is a material effect on the financial statement. Auditor will have to express a qualified or adverse opinion. So if it has a material effect, then it should be qualified or adverse opinion should be given. If the auditor is precluded by the management or those charged with governance from obtaining sufficient appropriate audit evidence, means if the auditor is not able to obtain the sufficient appropriate audit evidence, then the auditor can take a call either again to qualify or disclaim an opinion. So in those circumstances, disclaimer may be a better option. But again, those situations can be evaluated. What kind of information has not been provided, and not having those information, identification of non-compliance and the financial statement, a view can be taken that a disclaimer can be given. Then reporting of non-compliance to regulatory and enforcement authorities. So here, if we see if there are some suspected non-compliances, then the auditor shall determine whether it has a responsibility. The standard says if the auditor has a responsibility. So to give an example, friends, here, for example, in case of a NBFC, RBI clearly casts a responsibility on the auditors that in case of certain parameters which RBI want compliance with, and if there are non-compliances, then the RBI expects the auditor directly to report to the RBI with regard to those non-compliances of a respective NBFC. So there, RBI specifically specified that if 1, 2, 3, 4 criteria or the provisions are not being met, then the auditor is expected to report to RBI. So similar can be situation in case of other regulatory authorities. So the standard says that if there is an responsibility on the part of the auditor to report it to the regulator, then the auditor should report about those non-compliances to the respective regulatory authorities. This is very important thing. So, I mean, till time what we have learned and what we have understood, in nutshell, if we take a look on what we have understood, is this that first first laws and regulations which are applicable to an entity should be identified. Then second, what are the non-compliances which can be there, should be identified by the auditor, which have a direct effect, which does not have a direct effect. I mean, those can be inquired upon and can be discussed. And then once it has been identified that there are non-compliances, those should be communicated to those charged with governance, etc., etc. And if something is not happening, then, and if there is gravity to that, then the auditor should, if needed, should take a call that whether it needs to qualify or give an adverse opinion or disclaimer of opinion. And the last thing, even after issuing the audit report, auditor is casted with the responsibility to report to the regulatory authorities in case if it is required by the respective regulations that auditors are supposed to report it to the regulator. So this is a brief summary of the entire auditing standard, which we have discussed till time. Then, friends, important part is about documentation. So documentation is again very important. So what is identified non-compliance or suspected non-compliance, which has been noted by the auditor during the audit process, again, it should be documented. And what are the communications which have been carried out by the auditor with regard to those suspected or identified non-compliance with the management should also be documented. Those outcomes should be documented as a part of work paper. Now, friends, ICAI has also issued a revised SA 250. Exposure draft is there. So right now what we are discussing is on the existing SA 250. A revised SA 250 exposure draft on revised SA 250 has been issued by the ICAI, which also addresses the requirements specified on NOCLAR and Code of Ethics. So pursuant to NOCLAR coming into existence by having an amendment in Code of Ethics, there was a need to amend SA 250 also, and ICAI has come out with an exposure draft. So there may be a possibility very soon the revised SA 250 will come into existence, which will have a flavor of NOCLAR provisions also to a good extent. This is something which is important for you to know, but as of now, the present SA 250 is still in existence and it has not been repealed. And the revised SA 250 is still in exposure draft stage. With this, we are through with SA 250. Now we will touch upon the topic of NOCLAR. This is important for us. 250 in isolation, that may not be helpful for us to understand or to read. But if we read the provisions of NOCLAR in sync with SA 250, that will be very much helpful. And this is again very much relevant in case of listed companies. So we will discuss on the provisions of NOCLAR. Friends, Code of Ethics got amended. Revised Code of Ethics came into existence, and the NOCLAR provisions came into existence in October 2022. NOCLAR is in existence due to some of the reasons that there was a confidentiality barrier on the part of auditor, and it cannot be communicated by the auditor to the regulator about various non-compliances. So to deal with that, NOCLAR provisions came into existence. There was no guidance to assess PAs who are working out in service. So there is a segregation in NOCLAR provisions. So PA means professional accountant. So professional accountant means a chartered accountant who is a member of ICAI. So there is a segregation between professional accountant in service and professional accountant in practice. So professional accountants who were in service, there was no guideline or no provisions which are in existence in the past. So that has also been dealt with in the provisions of NOCLAR through Code of Ethics. Applicability. So ICI through Code of Ethics has made NOCLAR applicable with effect from 1st October 2022, as we discussed. But then NOCLAR is applicable to all the listed entities which are having a net worth of rupee 250 crore or more. So in case of statutory auditor, I mean auditing the books of any corporate, NOCLAR is applicable if the net worth of that corporate is of more than 250 crore and is a listed company. So if we take an example, if a company is listed but its net worth is less than 250 crore, NOCLAR provisions are not applicable for a statutory auditor. Company is not listed, net worth is more than 250 crore, again the provisions will not be applicable. So here the criteria is it should be listed and net worth should be of more than 250 crore. Then at present it is stated that subsequently it can be extended to all listed entities, which will be for which a date will be notified at a later stage. Now, in case of senior professional accounting service, I mean, mostly KMPs of listed entities, the NOCLAR provision says that it is applicable to all the KMPs of listed entities. So here the segregation is, in case of statutory auditors, the NOCLAR provisions are applicable only in case of listed entities having a net worth of 250 crore or more. Whereas in case of KMPs of listed companies, it is applicable to all. So whether or not the net worth is more than 250 crore or more, it does not make any difference. So this is one of the important parameters here. And this particular amendment has casted a huge responsibility on the members who are in service or who are heading various boards in the capacity of a director. We will discuss in detail in the forthcoming slides about it. So what do we mean by professional accounting service? So the provision says that an individual who is a member of ICI and who is working in any of the sector, whether it is commerce, industry, etc., it will be applicable. And it also adds here that who might be an employee contractor director. So director can be executive director or non-executive director. So आपको ये ध्यान में रखना चाहिए, ये मालूम होना चाहिए कि it's not necessary that an independent director who is there on the board will not get covered by these provisions. So if the independent director is a chartered accountant who is a member of ICA, then the provisions of Code of Ethics will be applicable to that particular person to the extent in which it is prescribed. And here, for the purpose of Section 360, I mean, for the auditors, where the practicing accountant is giving an opinion on true and fair view. So this is not applicable in case of internal auditor. So even if you are acting as an advisor, for example, if you are acting as a tax advisor or advisor in any other capacity to the company, or you are acting as an internal auditor or any other kind of audit you are doing, management audit, etc., the provisions of NOCLAR will not applicable to the chartered accountant who is giving that kind of service in the nature of a practicing chartered accountant. But if the audit is being carried out where a true and fair view is going to be given, then the provisions will be applicable. So through this slide, we will just summarize what are the requirements of NOCLAR and what are the requirements of SA 250 with regard to various corporates. So there's a brief summary which has been plotted here, which will give you a lot of clarity and which will help you. So NOCLAR with regard to PAs in practice. So I mean, if I say in simple words, chartered accountants or statutory auditors. So those listed entities which are having net worth of rupee 250 crore or more, it will be applicable. Yes. In case of other listed entities which does not have net worth of more than rupee 250 crore, it will not be applicable to the auditors. In case of unlisted corporates, it will not be applicable. In case of KMPs, I mean those who are acting as senior professional accountant in service for any of the company, it is applicable to all listed entities. So whether it is having net worth of less than 250 crore or more than 250 crore, but it is not applicable in case of unlisted corporates. Now, if we compare it NOCLAR with SA 250, NOCLAR is applicable, SA 250 is applicable to all PAs in practice, whether it is listed, unlisted entity or unlisted corporates. So more than 250 crore net worth or less than 250 crore, etc. Whereas in case of KMPs, SA 250 requirements are not applicable at all because auditing standards are applicable to the auditors who are issuing their audit opinion on financial. So there's an important slide which will give you a brief perspective about the applicability of NOCLR provisions in SA 250. Friends, here I would like to add one important parameter. Though explicitly the Code of Ethics guideline has stated that NOCLR is applicable in case of listed entity only with regard to having net worth of more than 250 crore. But indirectly, it is also applicable to all those components of a listed entity where it is getting triggered. So this also we'll discuss in detail in the forthcoming slides. Meaning and examples of NOCLR. So again, here the meaning of NOCLR is more or less similar in line with the non-compliance with laws or non-compliance which has been defined in SA 250. But certain phrases has been added here under Code of Ethics, which casts a wider responsibility and which has a huge coverage here. So if we read it, I mean, it again says any act of non-compliance with laws and regulations means any act of omission or commission, which we have discussed. We have seen that whether intentional or unintentional, again the same thing, committed by the client or employer, including by management. Now, this is something which is very important, which has been brought into NOCLR, or by others working for or under the direction of the client or employer. So, for example, in case of a construction company, I mean, the construction contract is subcontracted by the company to a contractor. So when it is subcontracted to a contractor, there will be people who will be hired by the contractor, and if the contractor does not deduct provident fund for its labors, I mean, again, that will be a responsibility casted on the part of the company. Or I mean, there can be people who are hired by the company who are supposed to work on the direction of the company, though they are not the of the non-compliances. I mean, those non-compliances will get captured here. So the definition is having a wide coverage. In SA 250, it was not covering this particular aspect, but here in NOCLR, this is covering this. Then such acts includes transactions entered into by or in the name of the company, etc., etc. I mean, this is the same thing. Then non-compliance does not include personal misconduct. Again, here the standard has the Code of Ethics provision has excluded the personal misconduct which is being carried out by any person in their individual capacity, which is not related to the business activity. Friends, I hope I'm clear till these slides. I mean, and this is being understood in a very simple manner. This will be helpful for you. So in case if you have any questions, I mean, please jot it down and we'll be happy to deal with those questions once we complete our entire session. So examples of NOCLR. So the Code of Ethics has also given certain examples, and if we look into it in detail, NOCLR provisions cover fraud, corruption, and bribery. So, I mean, again, the NOCLR provisions can be touched upon with fraud. I mean, they can be interrelated or interlinked with the requirements of fraud. This is one of the important aspects. Then corruption, bribery. I mean, corruption any which ways or bribery is a part of non-compliance with laws. I mean, laws does not permit to give you any kind of bribe, and there are anti-corruption laws. Anti-bribery laws, money laundering, terrorist financing and proceeds of crime, securities market and trading, banking and other products and services, data protection, tax and pension liabilities and payments, environmental protection. There is a breach of environmental law, breach of maintaining the data. I mean, DPDP Act is going to come very soon. It has been approved by the governor. Once it will get modified, this will also come into existence. Public health and safety is of such significance as to threaten its license to operate again. I mean, this is a very generic example which is given, but it has a lot of implications in case of companies dealing with various different sectors. Reportable events. What are the reportable events? A professional accountant practice who during the course of an audit engagement encounters or is made aware. So the reportable event which is required, I mean, which is specified by the provisions of Code of Ethics. It says that a professional accountant in practice means a chartered accountant or a statutory auditor who, during the course of the audit engagement, encounters. So till time it is fine. So friends, if we see till time it is fine with regard to SC 250. But in NOCLAR, the additional responsibility is casted, which says that or is made aware of. So made aware of is a very wide term. It can be made known to the auditor by anyone about any non-compliance. So it can be made known to the auditor either by the regulator or by a whistleblower or by any employee or any external party. So this is a very, very wide term. The auditor is required to consider this entire definition to understand what is meant by NOCLAR provisions in Code of Ethics. So then again, it deals with the same thing to have a direct effect, which you have discussed in detail on the determination of material amount and disclosure and other laws and regulations, which does not have a direct effect, but compliance with which might be fundamental to the operating aspects of the client's business. So it again deals with only two things: direct having law having direct effect, and law does not have a direct effect. But then encounter, in addition to encounter, it says is made aware of. The auditor is made aware of. Now moving forward, summary of appropriate authorities to report about NOCLAR. So which are the appropriate authorities? So this list is inclusive and it is not exhaustive. When the NOCLAR provisions came into existence, it was understood in that way that the non-compliances are required to be communicated directly to the regulator, which are material in nature in case of specified entities. However, there have been certain FAQs which have been issued by ICI the recent past. They have clarified that the reporting will be required only in those cases where it is specifically sought by the regulator. So we'll discuss in detail. But then these are some of the authorities which with which the discussions can happen under the provisions of NOCLAR: ICI, SEBI, in case of fraudulent financial reporting, RBI, MCA, ADA. So RBI regulated entity, for example, bank, NBFCs, HFCs, etc., etc. Or in case of any FEMA guidelines violations, etc. Ministry of Company Affairs in case of provision of Companies Act, non-compliances, etc., which are again material in nature, should be material in nature. REDA in case of insurance companies, REDA in case of real estate authorities, and Environmental Protection Agency in case of breach of any environmental laws and regulations. So this is an indicative list. This is not exhaustive. Exclusion from scope. So NOCLAR excludes certain kind of non-compliances. So one thing which is specified here is that those non-compliances which are clearly inconsequential, so which are minuscule in nature. I mean, there is no need to further look into it from the perspective of provisions of Code of Ethics. So if it is inconsequential, either by its nature or its impact, financial or otherwise, it can be ignored. Personal misconduct. So we have discussed that a top employee getting drunk or driving under the influence of alcohol. So personal misconduct which is not related to business activity is not getting covered under NOCLAR provisions. And non-compliance by parties. So there are non-compliances, but which are being carried out by parties which are other than client. I mean, client means company. So which are other than respective company or TCWG of that company or management or other individuals working for under the direction of a company. So excluding those, if there are non-compliances which are being done by other parties, for example, if it is done by a vendor of a company, I mean, then that will not get triggered for that company under the provisions of NOCLAR. Auditor's responsibility. So what are the auditor's responsibilities with regard to NOCLAR? And here in this slide, we will deal with the responsibilities of the professional accountants who are in practice. So the additional responsibility which is casted in NOCLAR when we compare with SC 250 is that auditor might consult. So the provisions of NOCLAR says that the auditor might consult on a confidential note. So consultation can be done by the auditor with others within the firm. So, I mean, this is fine. One can discuss with their tax expert, for example, if there's a non-compliance with regard to tax, etc. But then the provisions of NOCLAR says that it can also be discussed in a network form. So nowadays we know a lot of networks are there, where I mean the networks can be domestic network or the network can be an international network. So those networks which are registered with ICI, I mean it can be stated that the discussions can happen by the auditor within the network firm or with the institute. So this is something which is in addition to what was specified till time or with the legal counsel. So they might also discuss the same with internal auditors where applicable. So it is also stated further that given the circumstances, there can be a possibility then that there are non-compliances, and in those circumstances, if auditor found it suitable, they can also discuss about and then based on the relevance of the matter in management response, auditor should take further action such as consider disclosing the matter to an appropriate authority. So as we discussed, there can be various authorities which are governing the respective laws and regulations. And if there are non-compliances with regard to the specific guidelines, then the communication will be required to be made with the appropriate authority. But if it is specified in the respective law, and at last, I mean, the auditor can decide to withdraw from the engagement and the professional relationship where permitted by the laws or regulations. So the auditor at last can think of and can decide, considering the gravity of the matter, that he may not like to continue as an auditor for that particular entity because of the severe non-compliances. Responsibilities of senior professional accountants in service. So what are the responsibilities? So this is something which is again an additional thing which has come into existence by these provisions when these provisions were brought in under the guidelines of NOCLAR in Code of Ethics. So responsibilities of professional accountant in service. So in short, if we say it will mainly comprises of KMPs. So what are the responsibilities of KMPs? KMPs, those who are chartered accountants. It will not be applicable to KMPs, those who are not chartered accountants and even those who are chartered accountants who are member of ICI. So obtain an understanding of the matter. So the responsibility of those KMPs will be to obtain an understanding of the matter, including the nature of non-compliance or suspected non-compliance. So again, I mean, they will also require to carry out the independent assessment and verification on their own part. Till time it was not required because there was specific of the statutory auditors. But code of ethics are applicable to all, whether members who are in profession or members who are in practice. So it says the KMP should obtain an understanding of the matter, including the nature of non-compliance or suspected non-compliance. Then application of relevant laws and regulations. So that should also be evaluated by KMP, and assessment of the potential consequences. So what are the consequences of such non-compliances on various parties or stakeholders, maybe employing organizations, investor, creditors, etc., etc. After the understanding is being obtained by the KMP, take up the appropriate steps are to be required to be taken by KMP. It should be seen that KMP communicates those matter with GCWG, comply with the applicable laws and regulations, that those laws and regulations which are non-compliant are being rectified and remediated and they are being adhered to, have the resulting consequences about those rectifications, remediations or mitigations, reduce the risk of reoccurrence. So it should be seen that those possibilities of reoccurrences are being reduced or eliminated, and seek to deter the commission of non-compliance if it has not yet occurred. So deterrence should also happen if any non-compliance has not happened, in addition to what has already happened. So these are the procedures which are required to be carried out by KMPs of a respective company. Then, in addition to that, it says that determine whether disclosure to company's auditor, if any, is needed. So a KMP can also take a call conclusive call and can communicate it to the auditors of the company. I mean, if it's being found suitable by KMP, then it should be informed to the auditors of the company. Take further actions, including informing the management of the parent. This is one of the important, again, one of the important part. I mean, distinctive part as compared to SA 250, that the KMP is of a which is a subsidiary of a listed company. So in that case, I mean, in that case, the KMP of that particular subsidiary company can also inform about those non-compliances to the parent company, which will be having a material impact on the group's financial statement. And then at last disclosing those matters to the appropriate authority. So the gamut has increased. There's a wide coverage here on the part of KMPs also by virtue of provisions of NOCLAR. Then communication with respect to the group audit. So here again, the guidelines or the provisions of NOCLAR have specifically brought in the requirement with regard to the auditors of a component, that what should be done in the case where they find any kind of non-compliance with regard to that respective component, which is going to be considered as a part of consolidation. So it says that if during the audit of the consolidated financial statement, the auditor becomes aware of any non-compliance or suspected non-compliance with regard to his own company, then he shall communicate about it to the group engagement partner. So friends, as we all know the structure, I mean, in case of a consolidation, to give an example, for example, there's a company called A Limited, and it has two subsidiaries, B Limited and C Limited. Now, if C Limited has carried out some kind of non-compliance and you are acting as an auditor of C Limited, and you notice some non-compliances which are material, which are having material effect on the financial statement of C, and which will also have a material effect on the part of A Limited when it will get concentrated there, then as an auditor, you have to deal with those non-compliances at your level for company C, whose financial statement will be, whose financial statement opinion will be issued by you. And in addition to that, you are also casted with the responsibility to communicate how it will impact to the consolidated financial statement. So this is something which is additionally specifically stated in NOCLAR provision, that as an auditor, you will also have to communicate to the auditor of the parent company as an auditor of a component about those material non-compliances. Then communication to the group engagement partner shall be in addition to the responding to the matter in accordance with. So there can be various other additional matters which are required to be reported to the group engagement partner. So as we all know, when we carry out consolidation, if we are auditor of a parent company, we will share the group audit back with the components in case of material components. Or else if we are auditor of a component, we will, and if it is material nature, we will respond to the group audit partner and group audit engagement partner who is carrying out the consolidated financial audit of the consolidated financial statement. We will revert to them to the questionnaires which are being shared by them. So this is something which is in addition to that entire exercise, and the communication requirement applies. This is again one of the important things. So I mean, though I am adding in many of the places that these are the additional important things, but these are quite vital in nature, and these things were not there in the past. So it says that communication requirement applies regardless of whether the group engagement partners firm or network is the same or different. So what do we mean by this? So we can take here a couple of examples. So for example, there can be a possibility that for A Limited, the auditor is PQR Limited, and for B Limited, which is subsidiary of A Limited, the auditor is XYZ Limited. So in that case, I mean, the auditor of B Limited can or should inform to the auditor of A Limited, which is PQR Limited, about those non-compliances. That is one thing. Second thing, there may be a possibility that auditor of A Limited is PQR and auditor of B Limited is also, and the engagement partners are different, or from the locations where it's being audited is different. For example, PQR Mumbai is doing the audit and PQR Delhi is doing the audit of component. So then again, the communication is required to be done and it has to be documented. third scenario, there can be a possibility that there are various firms in a domestic network. So they have formed a network. So there is a firm PQR Limited and there is a firm XYZ Limited, but they both are forming part of one particular network. So even though they are forming part of one particular network, the provisions of NOCLAR says that in case the component auditor finds any non-compliance which are material in nature, they are still supposed to communicate to the auditor of the parent company, though they are forming part of the same network. So here again, the communication will be required. So friends, we have dealt with or discussed with three different scenarios, 1, 2, and 3. So this is important aspect which was not there till time. Then what should be done if you're an auditor of a parent entity? The Code of Ethics guidelines also touch upon that, what should be done in those scenarios. So if you are a group engagement partner and if you become aware of any non-compliance or suspected non-compliance in the course of an audit of consolidated financial statement, so the provision says that till time these specific provisions were not there. Now this is something which has been again specifically brought in, where it is stated that if you are doing the audit of a parent company and as an auditor of a parent company, you come across any kind of non-compliance which is applicable to any of the component. I mean, though which is relevant to you or which may not be relevant to you, but which may be relevant to the component. You as an auditor of the parent company are supposed to communicate to the auditor of the component. So till time it was always a bottom-up approach. Top-down approach was not there. So when I say bottom-up approach means a component was required to communicate with the auditor of the parent company and to specify. Now in NOCLAR provisions, it has been specifically stated that a top-down approach is also needed. So a parent company should also communicate to the auditor of the parent company with regard to any of the non-compliance which can have an effect on the standalone entity of that particular component. And again, this will be something which is in addition to responding to the matter in the context of group audit. So this is something which is very important. And it says that this is applicable only to those companies which are incorporated into the laws applicable in India. So only those companies which are incorporated in India, to them only it will be applicable. So for example, if we take if there is a company called A Limited, which is a subsidiary called B Limited, which is in India, and it has a subsidiary called C Limited, which is in Singapore. So in that case, if something material which is being noted with regard to non-compliance with regard to that entity which is based out of Singapore, the responsibility is not there on the part of the auditor to communicate to the auditor of C Limited. So the auditor of A Limited, which is based out of India, is not expected to communicate about the material non-compliance to the auditor of C Limited. I mean, that can be done if needed. I mean, but it's voluntary. It's not being specifically told or specified in the provisions of NOCLAR under Code of Ethics. Process to be carried out with regard to NOCLAR. So what are the processes which are required to be carried out with regard to NOCLAR? So first one is, again, I mean, what we have seen and discussed in SA 250, that list of all laws which are applicable to an entity should be identified and should be documented. So that listing should be done. Then identified or suspected NOCLAR could qualify as a key audit matter. So it may be a possibility that, I mean, in some of the situations, there can be a possibility of CAM, even if such NOCLAR is completely unrelated to the financial statement. In that case, I mean, there's a careful evaluation which will be needed at the part of auditor to identify whether it should be considered as a CAM or it will require as a reporting in the audit report under the category of modified opinion by way of qualifications, advice, or disclaimer of opinion. Whistleblower document should be looked thoroughly. So if anything which has been flagged down by any of the employee or by any external party, and if something which is directly flagged off to the auditor is something very important. Nowadays, friends, I mean, even we as an auditor find in many of the cases where directly the communications are being made by various external parties to the auditor, and they flag off certain concerns with regard to the various aspects of the company. So those should not be taken up in a lighter way. I mean, the auditor should look into it, those matters in detail, should discuss with the management, should inquire from the management, should see that it does not have any significant impact. And in case if it is there, it has to be factored accordingly with the required provisions of NOCLAR or SA 250, wherever their non-compliance is observed. Whistleblower documents addressed directly to the auditor, not to the company, should also be looked upon as we discuss. So there can be something which has been flagged off to the company. And again, as we know nowadays, we are also supposed to comment in Caro about the whistleblower mechanism which is there in existence in the company or not. Then we should request for a certificate from the compliance officer. So these are some of the broad processes which are specified here. As an auditor, we should also request from a certificate from the compliance officer of the company. So in all listed companies, in most of the large unlisted companies, there is a compliance officer which is deputed by the company. And in case of listed company, on quarterly basis, the compliance officer gives a certificate to the members of the audit committee that all the complied with. So that certification will help as an additional audit evidence and a work paper to say that all the relevant laws and regulations have been complied with, and there are no material laws and regulations. There are no material non-compliance with the laws and regulations. Then check whether any protocols and procedures exist within the client's organization. So one should also inquire and see that are there any mechanisms which are specified within the company. So in case of listed companies, there are mechanisms which are specified, whereas in case of unlisted companies or private companies, those may not be there. But then auditors should try to understand what systems are in place to deal with the requirement of dealing with the laws and regulations. Then inquire with the management, as we discussed in our earlier slides. Inquiry should be carried out with the management team. Obtain an MRL with regard to NOCLAR, that there are no non-compliances with NOCLAR. I mean, this is an additional support to the auditor, in addition to what process has been carried out by the auditor. Then look into adverse media comment, etc. So, I mean, some of the parameters we have touched upon in earlier slides. Now, friends, NOCLAR versus SA 250. This is a very important slide. I mean, I have prepared this for your better understanding so that you can understand what are the differences between NOCLAR and SA 250. And this will give you a much larger clarity about the relevant provisions under the relevant guidelines. So NOCLAR, as we know, is applicable only on audit engagements of listed entities with net worth of more than 250 crore. So here it is applicable only in case of listed entities. But as we have seen this, in case of components of a listed company, I mean, where we are audited, though it's not a listed company, so there may be a possibility component is not listed. We are supposed to communicate to the auditor of the parent company. So also. So it is applicable on audit engagements, and audit engagements are statutory audit of listed entities with net worth of more than 250 crore. SA 250 is applicable on all audit engagements. So this is one of the important distinction here. NOCLAR now is also applicable to senior PAs in service, which means KMPs of a respective company, of a listed company, whereas SA 250 is applicable only to PAs in practice who are issuing an audit opinion. Duty is casted on the statutory auditor to discuss about NOCLAR provisions with internal auditor wherever needed. In SA 250, no such specific mention is there. In NOCLAR provisions, again, it is specified that with regard to group audit, both the approaches of communications are to be carried out. I mean, either bottom-up approach or top-down approach. So either from parent to subsidiary or from subsidiary to parent, I mean, that communication will be needed, which is specifically stated in NOCLAR. In SA 250, again, there is no such specific mention about this process. Consult on confidential basis with the institute or with a network firm. In NOCLAR, it is stated that consultation should be carried out on a confidential basis. Whereas in SA 250, again, no specific mention has been made about this. Then it says that some matter is informed to the PAs by any party. It needs to be considered. So, like we discussed, we understood about whistleblower mechanism. If anything which has been brought to the knowledge of the auditor by anyone, then it should be considered. It should be evaluated. Again, SA 250 is silent on that part. Then it says it takes into consideration how non-compliance would affect creditors, employees, as well as the general public. I mean, the nuclear provisions takes that factor also into its consideration for determining the gravity, whereas SA 250 is silent on that part. And employees working on contract basis are covered. Like people who are working on behalf of the company, though they are not on the directly roles of the company, and they carry out any kind of non-compliance, they will still be covered under the provisions of nuclear. In SA 250, again, there is no specific mention about this. But then to address all these differential elements, I mean, as we discussed in one of our earlier slide, ICI had come out with an exposure draft on SA 250, and many of these parameters will be touched upon in SA 250, and to a greater extent, SA 250 then will be getting synchronized with nuclear provisions also. So it's only a matter of time. Then there are certain FAQs which are issued by ICI in October 2020. Also. So if we deal with it, what's the term during the course of engagement refers to the period of the audit engagement or period covered by the audit efficiency. So the first FAQ which is described here, that what is the term maybe there is some network. Just give me a minute. Sorry, I think there was some technical issue and I got disconnected. Uh, just give me a minute, I'll reconnect. My sincere apologies on that part. I mean, this was a technical glitch which I could not help. Uh, my screen is visible to everyone, right? Hello, is my screen visible to everyone?
Yes, sir.
Yes, sir, visible now.
We have a couple of more slides. We'll quickly go through it. So, what does the term during the course of audit engagement refers to the period of audit engagement or period covered by the audit of financial statement. This is something which has been specified in FAQ. So it says that during the course of audit engagement will refer to both. The FAQ clearly clarifies that this particular terminology will cover both the period of the audit and period after the completion of audit. I mean, when a professional accountant encounters or is made aware of any kind of non-compliance or suspected non-compliance. So the period covers both engagement period and period covered by the audit of financial statement. This is something which is very important. Then another FAQ is, does the code require professional accountant to detect acts of no-clar or investigate at their clients? So many a times there is a question which is being popped up in the minds of the auditors that are we supposed to inquire or to investigate into the matters? So inquiry is one of the process, yes, one should carry out, but investigation is something which is not being necessitated. And this has been clarified in the FAQ that no investigation is not needed unless and until there is some kind of suspicion or some kind of trigger element which is there where you may need to peep into further. Then the third question is, one of the paragraph indicates that a professional accountant might encounter or be made aware of no-clar or suspected no-clar in the course of providing a professional service to a client. What is the significance of distinguishing between encountering no-clar or suspected no-clar and being made aware of it? So this FAQ addressed to that particular requirement, that what is the significance of distinguishing between encountering no-clar or suspected no-clar and being made aware of it. So the FAQ clarifies this, that might encounter means come upon unexpectedly about any no-clar or suspected no-clar while performing an audit engagement or providing a professional service. It also recognizes that another party might bring the matter to the professional accountant's attention. So it might be a possibility that it has been brought to the attention of the statutory auditor. For example, another professional accountant or an employee of the client. Section 360 covers both circumstances. So the FAQ clearly states that this particular section covers both the circumstances. Is a professional accountant expected under the code to have specialized legal knowledge and skills unrelated to the engagement? I mean, this again is a question which pops up into the mind of auditors quite regularly, that are we supposed to have the knowledge of the entire gamut of laws which are applicable in India on all the corporates? The FAQ clarifies no, it is not required. The auditors are required to know the relevant laws and regulations which are applicable to a respective entity, and again whichever material implications. I mean, this is something which is very much relevant for us to know. Then the provisions also has something to deal with regard to the change in the auditors, where the FAQ has clarified. So if there is a change of auditor, but the predecessor auditor is aware of an act or suspected act, so there may be a possibility that there is a resignation of an auditor or there is a rotation of an auditor, and the predecessor auditor was aware of certain acts or suspected acts with regard to no-clar, and which were not yet addressed, but the term was completed or he has stepped out. Is the predecessor auditor needed to communicate about it to the proposed auditor? The FAQ says yes, predecessor auditor on request. So on request by the proposed accountant pursuant to para R320 shall provide all relevant facts and other information concerning the identified or suspected no-clar to the proposed accountant. So now here the responsibility is on the incoming auditor. So as we know, like we are supposed to carry out communication with the management. We are supposed to carry out the communication with the outgoing auditor as an incoming auditor, that whether there are any concerns on the basis of which we should not accept the audit assignments or anything which we need to know. So in that, we should be very much vigilant to inquire about any suspected no-clar which has been noted or identified by the predecessor auditor and which has not yet been addressed. So through that, we can at least take cognizance of the requirement of these guidelines. And there is a duty which is casted on the predecessor auditor to communicate about it to the incoming auditor. Is the group engagement partner required to take actions to address any identified or suspected NOCLAR communicated by those performing work at components for purposes of the consolidated financial statement, including in circumstances where the components are based in other jurisdiction. So this also we have dealt with by way of an example. It says that Section 360 requires a response from the group engagement partner at a minimum obtaining an understanding of the matter. However, if the matter is clearly confined to and is being addressed at a particular components and it has no other implications for the group and its stakeholders, the group engagement partner need not take any further action. So if there is no implication on the group or its stakeholders, I mean, no need to take further actions on that part. However, if the component is based in another jurisdiction, the group engagement partner need not take any steps because the NOCLAR provisions are applicable only on the components which are listed in India or based out of India. So this is something which is based out of India. Then, friends, the last 2 points here, an auditor becomes aware of an instance of NOCLAR shortly before the signing of the auditor's report on the auditor's financial statement. How does the timing of finalization of the auditor's report affect the auditor's responsibility under Section 360? So the FAQ says that the auditor's responsibilities under Section 360 are separate and distinct from the auditor's responsibilities under applicable auditing standards. So the NOCLAR provisions are different, which are governed under Code of Ethics, and auditing standards requirements are different. The timing of the finalization of auditor's report, therefore, does not affect the auditor's responsibility. The essence here, the FAQ clarifies this, that NOCLAR is something which is important. Now, the auditor will have to take a call as a part of subsequent event whether it will have any implication in terms of reporting in the financial statement or audit report or not. So that can be dealt with. So, for example, if we take that if the audit is getting closed for the financial year 2023, and before sign off of financial year 2023, auditor comes across certain kind of NOCLAR activities which are material in nature, then the auditor will have to take a call on the basis of the relevant auditing standard whether it will require any reporting in the audit report or in the financial statement or not. But that is something different. In addition to that, when it has been identified at that point in time, I mean, that has to be dealt with as per the provision of NOCLAR. Like, for example, discussing with TCWG, communication with the components or the group auditors, and communications with the regulators, etc., etc. If those things are material in nature, so these two things are separate. One is reporting in the audit report of financial statement and the communication with the respective authorities or the respective components. So the timing does not make any difference here. I mean, one will be for 2022-23 and another will be for 23-24. When a professional accountant has determined that further action is needed in the particular circumstances to whom NOCLAR must be reported, this is something which is very important, which has been brought out and clarified by ICA through an FAQ. It says that if professional accountant believes that management is involved in NOCLAR or suspected NOCLAR, professional accountant shall discuss the matter with TCWG. In case TCWG is involved, the reporting authority is the relevant regulator. The reporting authority is the relevant regulator regulating the subject matter of NOCLAR, provided such disclosure is required by law. So as we'll discuss in one of our example, in case of NBFCs, RBI is specifically required to make a report to the regulator in case of non-compliance with certain specified parameters. So there RBI is specifically stated. So if something like this is specifically stated by any of the regulator, then the disclosure has to be made to that respective regulator under the provisions of NOCLAR also. But all these parameters have to be tested, whether they are material in nature, whether it has any impact, direct effect, not having direct effect, communications, etc. All those things are required to be done. And one should also see that if those non-compliances are mitigated by the company, those non-compliances are mitigated once it has been communicated by the auditor to management, I mean, something which has been observed, that is, it has been rectified, then a call can be taken that there is no need to further communicate it to the regulator because the ultimate intent is to mitigate the non-compliance or remediate the non-compliances of laws and regulations. But if those laws and regulations which are non-compliant and still not have been dealt with adequately, then appropriate steps will be required to be taken in that regard. Friends, with this, we are on the verge of conclusion. So the another slide here is dealing with, is there any expectation for an auditor to disclose an identified or suspected NOCLAR to an appropriate authority if management and TCWG have not appropriately addressed the matter? It says that disclosure of the matter to an appropriate authority should be taken because if there is a legal requirement for the same. Again, in this FAQ, it has been clarified by the ICI that it depends upon the legal requirement, and based on that, communication will be required. Does the code require professional accountant to respond to acts of NOCLAR committed by contractors or agents working for the clients or by non-executive directors of the clients? So this we have dealt with. So the FAQ clarifies yes. NOCLAR says that any act committed by individuals working for or under the direction of a client, which are contrary to prevailing laws or regulations. So any contractor, agent, and non-executive directors are example of the parties who work for or under the directions of a client. So in that case, if any non-compliance has been committed by them, then yes, the provisions of NOCLAR will be applicable to them. Friends, with this, I mean, we are through with our today's session. I hope I'm able to clarify in a very simple way about the provisions of non-compliance with regard to laws and regulations, which are there in the auditing standard SA 250 and in the Code of Ethics. And it is very important for all of us to read both these guidelines in totality, which will give us a better clarity to perform our role as an auditor while carrying out audit of any financial statement. So friends, thank you very much. And with this, I mean, I'll request if anyone has any kind of questions to respond to, I'll be happy to answer that. And with this, I'm handing it over to the council members, Anil ji and the entire team. So happy to take any questions if anyone has.
Thank you so much, sir. You have covered all the aspects of SA 250 dealing with NOCLAR, and frankly speaking, our members have gained a lot through your deliberation. We have received certain questions relating to the same. May I request today's moderators, Rajni ma'am and Isha ma'am, to please start the Q&A session, please.
Yeah, thank you so much, CA Amit Hundia ji, for such a detailed explanation of SA 250. I think the questions which we received, you have already covered under, various areas, which you, I think, in the facts on NOCLAR. But still, I just read out. First question is, can RBI hold the auditor responsible for misrepresentation of financial statements where RBI is not concerned?
No, so if RBI is not the regulated entity for a particular company, so I mean, I believe this example is for any company. So if it does not have any authority on that particular company as a regulator, then RBI cannot hold. I mean, that's a different matter whether to hold or not, and the discussions will be different on those different parameters. But with regard to NOCLAR provisions like non-compliance of laws and regulations, or with regard to SA 250, one cannot say. And normally RBI does not deals into those matters. But for example, there can be a possibility. For example, if a company is non-compliant with FEMA guidelines, and FEMA guidelines are applicable to all the corporates, and those guidelines have been breached and the non-compliances are material in nature, then RBI can definitely hold us responsible, and we are responsible as an auditor to see that those guidelines are adhered to. But in case of generic companies, general compliances, normally RBI does not get involved into. It deals with only those entities which are regulated by it, such as banks, NBFCs, housing finance companies, etc., etc.
Thank you so much. The next question is, if major non-compliance to the laws that do not have a direct effect on the financial statement is noticed, then whether the statutory auditor is required to qualify the report. It is basically, it is not related to financial statements.
Yeah, so we have discussed in our today's session that there can be two kind of effects. One is having a direct effect on the financial statement, which is material in nature, either in terms of figures or disclosures, and second, which does not have effect on the financial statement, but which is material in nature for the fundamental existence of the company. So there are certain parameters. So for example, what we discussed, like a chemical manufacturing company is not complying with the environmental laws and regulations, and it is hazardous to the general public. So then it will be a kind of non-compliance, and there may be a possibility when the environmental laws are breached, the environment ministry can ask you to shut down the operations. So in that case, it is something which is very fundamental to the operations of the company. And if it is in those nature, I mean, yes, the provisions will get triggered either under SA 250 or NOCLAR, both. So that has to be evaluated. First is material, and it is fundamental to the existence of the company. So considering the various regulations in which a company can operate, so maybe a company who is operating in SEZ or gift city or real estate, again, stockbroking, etc., etc. There can be different provisions or different regulations. So it has to be seen from that perspective.
Yeah, very well explained. The next question is, if there is any non compliance, whether the auditor can directly report to the regulatory authority or through the audit report. For example, if there is Companies Act non compliance, in this situation, can auditor directly report to MCA or auditor will cover this in his report? Also, if your answer to this question is auditor can directly report to MCA, is it in conflict with professional code of ethics or no?
So if we take it step by step, SA 250 and NOCLAR, in SA 250, it is clearly stated that if it is required by the regulator, then only you as an auditor are supposed to communicate to the regulator, otherwise not. So reporting in the audit report is something which again will be a subjective and judgmental call, which has to be taken by the auditor based on the gravity of that particular matter. If that matter is quite grave, where you have already reported it by way of a qualification or adverse opinion or disclaimer, that is one thing that is already being there in audit report, and it is communicated to the stakeholders. Stakeholder, when I say, is shareholder, because the report is addressed to the shareholders of the company. So that is one thing which is being addressed to. Now communicating is with the regulator. I mean, in case if it is needed, if it is specifically specified by the regulator under SA 250, then you are supposed to communicate. Now, if we come to NOCLAR provision, presuming that the company is a listed company having a net worth of more than 250 crore, on which NOCLAR provisions are applicable, and this is that kind of company, in that case, I mean, again, the communication will depend. So earlier there was a dilemma and there was a assumption that because of NOCLAR provisions, you are casted with the responsibility to communicate directly to the regulator even about such non-compliances. But now with the FAQs, ICI had further clarified on the similar lines, what was there in SA 250, that if it is specifically required by the regulator, then only you can communicate or you should communicate. Otherwise, there is no need for you to communicate with the regulator.
Thank you so much. The next question is, why NOCLAR requirements do not apply to non-listed entities? There are large unlisted entities such as insurance companies, large cooperative banks, then why it is not applicable?
That decision, I mean, that I cannot say. I mean, these are regulatory decisions and which have been framed at a very high level by all the regulatory bodies. So, point taken, well noted, and a good question. But then again, it depends. I mean, the assumption or presumption here is, first of all, this is a new provision. This was not there in existence earlier. So maybe what has been mentioned by me in one of my slides, that ICI has decided to make it applicable in a gradual and streamlined way to all the listed entities. So right now it is applicable to listed entities with net worth of more than 250 crore, and then maybe gradually it will become to all listed companies. So that is one of the parameter. Now the question will be there that why it is not applicable to large unlisted companies. I mean, again, with the time, there may be a need and that can be factored. But as of now, I presume so that the regulators might have thought that the unlisted public companies does not have a large exposure to the public at large. So they are not exposed to the public at large or to the regulators. So in that sense, it might have been thought of, but maybe with the evolving time, there can a need which can get arise and that can be thought of. But as of now, this may be a logic, and maybe after having a lot of deliberations at higher level, the authorities have finalized the applicability criteria.
One question, while you were answering, it just came to my mind. In case of unlisted entities, also where public is not directly, it is not affecting the general public. But in that particular case, like that company has taken borrowed loan from the bank, right? In that case, the bank money pertains to the normal public. So directly or indirectly, public is getting affected by it. So don't you think that it should be covered?
So, I mean, so in that case, we should then go back to SA 250. SA 250, like I have explained, is applicable to all corporates, whether it is listed, unlisted, with a net worth of more than 250 or whatever. So there are two things. One is SA 250, second is NOCLAR. So NOCLAR may not be applicable to those entities, but then SA 250 is applicable to all corporates. So whether it's a private limited company with a net worth of 1.5 crore or unlisted private company with a net worth of 1,000 crore, it is applicable to all. So if you are acting as a auditor of any corporate, SA 250 is applicable to all, and you have to comply with all those provisions. NOCLAR has come out with some additional guidance, additional requirement, additional provisions. So at present, it is applicable to certain set of companies. And again, NOCLAR is more relevant to those KMPs who are in service, like executive directors, non-executive directors who are chartered accountants. To them, SA 250 is not applicable. So for you as an auditor, if you see that the responsibility is always there, it was there in the past and even it is there in today's time. So there is no dilution on that particular parameter. SA 250 covers the entire gamut of the corporate world. NOCLAR covers only certain set of corporates, but then too with additional requirements. So those additional requirements are not applicable and they are not detrimental in that sense in the case of unlisted public companies which are very large in nature.
Thank you so much. One more question. In aviation industry, can the audit procedure be limited to reliance on in-house regulatory compliance audit conducted by the entity? As the auditor may lack technical expertise in understanding and evaluating the aviation compliance directives given by DGCA or other governing body.
Personally, to my mind, I mean, one cannot take an excuse or shelter here because the regulations are quite clear. The standard is quite clear. I mean, the kind of entity which you are working on, you should be well versed with the applicable of major laws and regulations which are impacting that particular entity. So, I mean, if you are auditing a particular company which is not into the aviation business, there is no need for you to know the aviation regulations. For example, if you are acting as a travel agent, etc., etc. But then, if you are dealing with the aviation company, and this is something which is very important, at least you should be aware of the material laws. I mean, which can have an impact on the financial statement, or which can does not have an impact on the financial statement, but which is fundamental to the operating aspect of the company. So one cannot take a shelter, and one has to be well versed. I mean, considering the present requirements of various guidelines.
So in my view, in that particular case, auditor can take help of experts also.
Yes,
So,
yes.
okay, thank you so
Please,
much.
please, please,
Now,
please carry on. I mean, I think you were saying something.
no. It is if auditor per se is not having that kind of knowledge, then they can definitely take help of expert in that particular field. So which is required by other accounting standards.
Yes, so I mean, it's but obvious that one person cannot be aware of all the laws and regulations, and then that kind of expertise may not be there. But then, when you are accepting any audit assignment, you should look into that criteria that whether you will be able to deal with the requirements of that particular entity and whether you will be able to deliver justice while giving an audit opinion for that particular entity. So this will be one of the important aspects which one has to consider. And then what you rightly said, I mean, in that case, the guidance of either in-house experts or maybe external experts can be taken. Again, the confidentiality clause and all will come into picture. But then definitely it can be taken, but then ultimate responsibility will still be of the auditor. The responsibility of the auditor will not get diluted here. So that has to be kept into our I mean, like what is stated in the non-compliance definition, either it is omitted, committed, intentional, or unintentional. So you can't say that I don't know anything and I have not adhered to. There is no excuse for that.
True. Thank you so much. Now, CA Isha Gar will take up the other questions which are, posted by professionals.
Thank you, Ms. Rajni. So, sir, the questions are, the first question is whether the head of the internal audit of banks, insurance companies, NBFCs, either as an employee who is a CA or a firm, are required to report major non-compliances to the ICI, RBI, or IRDA?
Earlier, I mean, when the NOCLAR provisions were in draft stage, there was a specification like this. It was applicable to all chartered accountants. But later on, when the final guidelines came, the ICI clarified and the NOCLAR provisions clearly stated that it covers KMP. So I'm using the word KMP, but then it says that if one person is able to exercise significant influence, etc., etc. I mean, the various parameters which are defined based on the role of that particular person. One should not go with the designation of that person, but the kind of role and power that person has. Based on that, if it can be said that that person is one of the critical member of the organization, and if that member is a chartered accountant, then yes, NOCLAR provisions will be applicable. But otherwise, other than that, for example, if there is a account head or a GM of the company who is carrying out his activities in a day-to-day manner, and he does not have those kind of power or responsibilities, then NOCLAR provisions will not be applicable to that particular person, though he is a chartered accountant.
Understood, sir. Thank you. The next question is, during tax audit, if auditor identifies non-compliance of GST laws, whether auditor should report in his tax audit report. For example, during tax audit, auditor identified that the client is eligible for GST registration, but client could not get registration. This is clearly a non-compliance in this situation. Whether auditor should report in his report.
No, reporting in the tax audit again, I mean, depend upon the respective clause, what is the requirement of that clause. So if the registration is not obtained, I mean, first of all, whether you are the statutory auditor of that company or not. So if you are statutory auditor of that company, you will have to deal with it accordingly in your audit report. Now, suppose if you are not the statutory auditor, you are only acting as a tax auditor. Then again, I mean, what is the reporting requirement in Form 3CD? And Form 3CD whether requires you to specifically state about this particular matter, because Form 3CD comes out with certain set of questionnaires on which auditor is expected to. So to the best of my knowledge, there is no specific question with regard to it, but if there is any specific question, it's like a complete questionnaire. If there's a question, then you have to respond it adequately. There is no question, I mean, it's not necessary to respond it in the tax audit report, but in the main audit report, yes. And again, if you are only the tax auditor and not the main auditor, statutory auditor, you can inquire with the statutory auditor. And you can see that how the statutory auditor has dealt with in the while issuing their own audit report. So it is more relevant from the true and fair view opinion which is required to be given. Tax audit is something where certain specific set of questions are required to be responded.
Okay, thank you, sir. Next question is whether the provisions of NOCLAR apply to senior PA in service or practicing outside India.
It is applicable. So when you say senior PA means senior PA in service, right? I mean that is a question.
Yes.
Yes, so senior PA in service, it is applicable to all senior PA in service. So when I say senior PA in service means KMP. So I mean in simple terms, it is key managerial person of the respective company. It is applicable to them. Now it does not make any difference whether you are in India or outside India. But if so for example, if there is a chartered accountant who is member of ICI and who is staying in New York, for example, and he is sitting on the board of a company which is listed in India, having net worth of more than 250 crore, then that provisions of NOCLAR will be applicable to even that to that particular chartered accountant. Because that chartered accountant is one of the KMP. He is KMP on the board of a company which is having net worth of more than 250 crore, and he is a member of ICI. So all these parameters are triggered. So in that case, there will not be any differentiation whether he is based out of India or based out of India in India.
Okay, sir. So my last question would be, if management does not provide such information when asked for, then how to deal with the situation?
So again, I mean, those matters have been touched upon in SA 250 and NOCLAR provisions. So if management does not respond to you, I mean, it says that considering the gravity of the matter, you should seek a legal opinion, legal advice. What should be done in those circumstances? You can take a call. Either you need to report it to the regulator, again, looking into the gravity. And the last resort, I mean, you can decide to step down from the assignment if you are not getting the information. And the additional thing will be there that even if you are supposed to issue a report prior to your stepping down, then you can take a call accordingly based on the legal advice to modify your audit opinion, which can also cover disclaimer or adverse opinion considering the facts and circumstances.
Okay, sir. In this, in case of previous auditor is also not cooperating with us, then what should be done?
There is a rare possibility that previous auditor will not cooperate, because if the incoming auditor writes to the previous auditor, it's the responsibility of the previous auditor to respond to it. And if the previous auditor is not responding, again, there will be a violation of code of ethics on the part of previous auditor, because as per ICAI guidelines in code of ethics, previous auditor is supposed to respond to the incoming auditor. So in that case, the incoming auditor can take help from ICAI in case. But normally, I mean, normally what is the process that we write to the previous auditor in a negative manner, that if the previous auditor does not respond to us within a time period of defined period, for example, 15 days of our communication, we presume that there is nothing to be reported from the previous auditor's side to us. So like we as an incoming auditor has carried out with all the responsibilities which we are casted upon by the regulator. Now, if the previous auditor does not clarify or comes out with a clear positive response, we'll presume that everything is appropriate, or else they will have to, because the ultimate onus will be on the previous auditor in those circumstances.
Okay, sir. So thank you so much, Sri Amathundia, sir, for sharing such a valuable insights on SA 250 and Code of Ethics and resolving all our queries on the same. I would also like to thank CA Sanjeev Singhal, sir, the chairman of AASB of ICI, and vice chairman Vishal Doshi, sir, for conducting this 151st webinar. And also a special thank to AASB for organizing this webinar. I would also like to thank all the participants, all the professionals for attending this webinar. Now, I would like to call Mr. Amit Dhingra, sir, to please provide some final concluding remarks.
Thank you so much, sir, for such a wonderful deliberation and insightful your thoughts as well as expertise you have shared with our members relating to SA 250 as well as NOCLAR. We have gained a lot from your deliberation. And I also extend my heartiest thanks towards both the moderators, Madam Rizvi and Ejaji and Madam Isha Garji, for sparing their valuable time as well as moderating today's webinar. Thank you so much. Thank you.
Thank you, Anilji. Thank you very much. It's my pleasure to share my learnings at this forum. And once again, thank you to the entire ESB.
Thank you, sir.